the Market Watch screens, as we call them. All right, so for this monthly coaching session, I am going to focus on the idea of trading with relative strength. Now, there's a number of different ways you can go with this, and I'm going to start with I am going to start with kind of the combination between the opening range and relative strength, and how to use the opening range to identify a good relative strength. But we may, depending on time and depending on how it goes, may also talk about identifying the relative strength in the bigger pattern of things. But before we get into the intraday application of this, and in looking at this, yes, I am going to look at how we take hot scans and have hot scans both illustrate where the relative strength is and find good relative strength situations. So the end result hopefully of this particular coaching is that you'll feel more comfortable going to hot scans to see which stocks are setting up for either strong relative strength plays or weak relative strength plays. And one of the most powerful ways to see this intraday is combining it with the opening range. The same patterns still work on end of day, or I should say daily or weekly or even hourly patterns. And the reason that I'm starting with the Market Watch charts here is because I think right now the markets are currently in a condition that is very, it's a really good example of relative strength from one market to the next. And what I mean by that is you've got you got half the equation here showing much better relative strength relative than the other half. And let me just put in some moving averages here. It's another kind of measure of relative strength. All right, now, so first of all, when I talk about relative strength in this presentation, I'm not talking about RSI at all, okay? I'm not talking about that RSI oscillator. I am not talking about the straightforward ranking of your entire universe and calculating the relative strength. But I am talking about kind of a version of that, a combination of that, and the idea of having a ratio chart. But this, for all intents and purposes, we're going to be using the concept of relative strength by looking at one particular instrument relative to what the market is doing relative to key reference points. All right. You should be able to hear me. Someone's saying no sound. Hold on one second. Sorry, because Mary just stepped out. Okay, yeah, you guys are saying you can hear it. All right, I'm just letting them know. If you have a problem with sound, and actually, sorry for the tangent here, but if you have a problem with sound with GoTo, generally the way to fix it is to log out, log back in. The other thing is, it seems like more recently, we've had a number of people complaining that they've had trouble even getting into GoToWebinar. If that's the case, try the in-private browsing functionality on the browsers, and sometimes that will enable you to get around cookie issues or cache issues. All right, so sorry for the diversion. Where I was going was the idea of relative strength is you want to find the stocks that are leading or the stocks that are not going down as quickly if you're looking for long trades as the overall market. So that's what I mean by relative strength. Now, this is not always the case, but currently in the markets, we've got a huge divergence in the performance of the SPYs and the diamonds over here on the left, in that these are banging on the top of their ranges, and some really significant ranges, where the Qs are nowhere near the top of their range, and the IWM nowhere near the top of the range. And the other measure of a relative strength would be to use the key reference point of the moving average. So here's, as I make it white, the 50-day moving average in the Qs in the upper right and the IWM in the lower right. And you can see that these two markets are below, and I'm going to even say well below, even though the Qs are bumping up against it today. Whereas the SPYs basically pulled back to it and have bounced off it. And the same is going to be true for the Dow, but you don't see the moving average there. So you've got two totally different realms in the markets right now. So the SPYs have really good relative strength vis-a-vis technology and vis-a-vis the broader index, being the IWM. Now, I'm not necessarily going to go into what that potentially means for the market rolling over, but that's what I mean by relative strength. And so if we start looking at ideas for long trades, the stronger place to look for the long trades is over here in the SPYs, unless what you're looking for in your trade is the idea to buy the dip against the 200, right? But if you want to buy the leader right now, the SPY is the leader, or you could argue the Dow is the leader. So we're going to take that concept and we're going to focus on how do you look at this intraday and find day trades or even good entries to swing trades. But let's start with day trades, using the opening range and hot scans to show you this. And there are really the two of my I would say favorite setups are when you've got a breakout of an opening range that's a good relative strength breakout, or an opening range reversal that's a good relative strength opening range reversal. So in order to understand how we're looking at relative strength, we have to start by understanding that my definition for this session of relative strength is how the market, or how your instrument is trading relative to the market. And the market for us is a combination of all four of these indexes, with a higher weighting on the three major ones, SPY, Qs, and IWMs, right? But in an environment where these indexes themselves aren't in agreement, it makes it a little more difficult, right? So there are times, and I would say more often than not, you have your indexes pretty much walking in step with one another. While there may be slight divergences that happen over days or a couple weeks, the divergence we see here is much more pronounced, but we're still going to focus on it. So let's take a look intraday. Just take a look at the same indexes on a 5-minute basis. All right. So just so we're kind of consistent with what you're looking at, typically if you see a green solid line on the chart, that's the high from the day before. If you see a red solid line, that's the low from the day before. And the dotted lines are the opening range. So green is going to be an opening range high, red an opening range low. I'll tend to look at the 5-minute charts because I can get more data in. I'm not going to talk about specific ORSF entry rules in terms of the opening range with time confirm and all that. So the 5-minute charts will suffice here. So intraday, we want to know where our leaders and our laggers are relative to their, in this case, I'm going to focus more on the opening range. So the leader, the SPY, if that's breaking out of the opening range, whether it's a 5-minute or a 30-minute, I want to also see the other ones breaking out. So in this case, we had that. So today's breakout was a confirmed breakout, as I would call it, from a relative strength point of view. They're all doing the same thing. The one fly in the ointment, though, is that the Dow is not even close to having broken out. Right, so there's an example of the Dow showing really weak relative strength relative to the other four. Right now, while this isn't the topic specifically of this conversation, when we're looking at the markets and trying to figure out whether or not the breakout's going to continue, whether it's really a strong uptrend day for the day, if all four don't break out and confirm, then the breakout itself is suspicious, right? So the fact that where'd my pen go? The fact that the Dow has not broken out makes this breakout that's now trying to hold on to the 30-minute opening range high in the SPY a little bit suspicious. So if we now break down and we get a reversal, I'm going to put more credence in the fact that this reversal could actually continue into a move down, because the Dow was unable to get through its 30-minute opening range high, right? It'll get even more credence, a reversal that is, if the Qs then break down as well and the IWMs break down. So that's pretty straightforward. If everything's doing the same thing, then it's likely it's going to continue. The trick, the art, science, is kind of identifying what the same thing is. And it shifts from day to day, or from hour to hour, right? So in the morning, the question was, as the SPYs broke down through their opening range and the diamonds break down through their opening range and the IWM broke down through its opening range, the question is that going to continue, or is this reversal something that you should follow? Well, if you look over at the Qs did not even break their opening range. All right, so the markets weren't really 100% convinced that they wanted to go lower, and if you combine that with the fact that they only spent the close of a bar, the next bar, and the following bar underneath the opening range before they came back up through it, now that's plenty of time for the Qs to also break, and they didn't. So when SPYs come back in, this opening range reversal is one you're going to want to pay attention to from the bullish point of view if you're trying to figure out which way the markets might go. Right? Now we're going to apply that same concept to individual stocks. Now, as it applies today, I'm going to take the Dow out of this just so that I can put in the individual stock. And in this case, I'm going to look at IYR. Now, I'm picking IYR for a very simple reason, and that is that I'm in it on a swing trading basis and always kind of looking to kind of add on the dips and take some profits on the rallies and keep a core position. So today was a really good example of a great day to add on a dip because of what we're just talking about. So here's an example of a really good relative strength setup where my focus is not necessarily buying the individual indexes, but finding a stock or an ETF. In this case, it happens to be an ETF that I've already got a bullish bias on. It's just easier, if you do this, and we'll take a look at stocks in the focus list and see if there is see if there are any stocks that showed up in the focus list that are doing this. Hold on one second. But for now, let's just assume that IYR is the equivalent of being in a focus list, because, as I said, for me, this is one that I've focused on. Now, I think it's pretty straightforward. Let me know if it's not. So the market sells off. It's got an opening range breakdown. That said, it's doing it in a positive mode environment. And as it's breaking down, I'm seeing the IWM is breaking down. I'm not that happy about that, but I'm seeing the Qs, as I just pointed out, didn't break down at all. And the instrument that I'm interested in, while it may have broken down, just take a look at the way in which the markets broke down versus the way this broke down, right? Totally different. Totally different. So this is where I want to step in and look to do an opening range reversal trade. All right. I mean, it happens also to be at a good spot because the low of the prior day I could put in my stop. Right. That's building on the concept. But even if that wasn't the case, this is the pattern that I'm looking for. And the thing that makes this one really compelling is that, for the most part, I'm going to try and make the presentation easy to follow by saying, just take a look at what the SPYs are doing, or the Qs, depending on the stock that you're trading, and see how your particular stock is trading relative to that stock, right? That makes it simple. Once you get good at it, or you get used to just looking at the markets this way, then you can do look for what happened today, which is find a situation where actually the markets have a good-looking opening range reversal pattern in the stronger index, because the weaker index of the Qs actually isn't even breaking down today. All right, so if the stronger index comes back and the weaker index never breaks down, sounds like a pretty good day to do an opening range reversal in the markets. That makes this opening range reversal look even more compelling. Now, a natural question, I would say, to this would be, well, what if the IYRs didn't break down? Would you still look for it to be a reversal? And the answer is yes. Now, from an opening range strategy standpoint, we don't really get kicked in to a signal unless it breaks the opening range, but I would say that you can fudge it from the standpoint of if you've got a good test, meaning a touch or almost a touch of the opening range, and then it reverses, there's your opportunity. Question, can you scan? Yes, we will get to scanning for the opening range for sure. And in fact, you can scan for this particular pattern through the whole database, through your portfolios, through the focus lists. Now, as this turns out, and as I'm watching this, I'm actually tempted to go look at the daily and see. Let's take a look at the daily, if you don't mind indulging me, just to see if I might add. High 69.75. Now, who can tell me why the first thing I'm looking at is yesterday's high and where that is on the daily chart? So here's what I did. I don't know if you kind of heard me say this, but I asked you, like, I want to look at the daily because literally what I'm teaching you right now has me thinking maybe this is a good time to add to IYR. All right, so with that in mind, why did first thing I looked at, I wanted to see the daily, and I wanted to see, and the first thing I went and looked at is yesterday's high. Can anybody tell me why I looked at yesterday's high? And the next thing I'm going to look at is this prior day's high here. So 69.66 and 69.75. Why am I looking at that number? And SPYs, while I wait for an answer, 188.50, 188.40, 188.40 for all intents and purposes. So, okay, so one of you is saying yesterday's high is resistance. That's somewhat true, but we're through it. And Steve saying prior day high, most recent support. Absolutely. Absolutely. That's exactly the reason. Now, I was not, I should have known from looking at my 5-minute chart whether or not we were through yesterday's high. Honestly, I wanted to go to the daily chart to make sure we were through it. I probably couldn't have figured that out. But I also know from the chart, because like I said, I've been watching it, that there were highs that could be relatively close to one another. So I wanted to make sure I was through the resistance. So Jim, you were right about saying it's the resistance. The fact that we're through it still makes it important because I would want that in my stop if I want to take a cheap shot here. And because I knew that there were other highs that could be close, like I wasn't sure where this high would be. Now that I know it's this high, the reason I look at that is because it's the same reason. If I'm a buyer in here, I'd really like to, my thought would be, this is a good relative strength breakout. In order for this to really keep going and be a good relative strength breakout, it really should hold these highs. All right, this literally, and I didn't plan it this way because this hadn't happened when we started the webinar, but this literally is exactly what I wanted to demonstrate in this session, which is I've got a situation here where I've got a good relative strength breakout on a stock, happened also to be a good relative strength opening range reversal. And if I want to take a cheap shot to, in my case, kind of add to it, but I could say, you know, it's just a day trade too, if the relative strength concept is going to hold throughout the day, then really it should hold its opening range and it should hold these prior highs that it's breaking out from. So that's the natural place that I go to look to say, well, how much is it going to cost me in terms of a stop? Now, before I go do that, I want to point out that in terms of kind of another relative strength measure, we've got the Qs that have not been able to take out these levels while the SPYs have. So the Qs, even though they're holding up intraday on good relative strength, they're right up against another key relative strength comparison vis-a-vis the SPYs, and I don't like the fact that it's unable to get through it. So SPYs, I looked at the same numbers on SPYs, and it turns out that it's about the 188.40 level. So that 188.40 level is the level I don't want to see the market come back down through on a daily basis in conjunction with this level here, which off the top of my head I'm forgetting what the level was. 66, make it 65, and this was 75. So that 10-cent range, 65, so it's down 25 cents from where I am right now. That's not too bad. So now I'll go take a look at the 5-minute, and we'll go back to the relative strength. All right, so see, I could see yesterday's high right here in the green line. So I really should have known what that was, but I didn't know what the prior day was. The other thing I would do is take a look at this, scrunch it up, so that when I look at the prior day's high in here, I can see how much trading is around there. What am I really going to get in my stop? So the reason that this is catching my attention, going back to the shorter term, is IYR has continued to make new highs through its opening range, where the SPYs, while they're still kind of holding at their opening range, have not. All right. IWM continued to move higher but has pulled back, and the Qs has not made a new high where IYR has. Still holding, right? So it's still doing okay, but IYR seems to have a good positive momentum going that's above and beyond the overall market. So I'd like it. It's not the best scenario. I'm going to show you a better scenario because it's a little late. But as I was just pointing out, if this pullback in the market is going to be one that it comes back up, then this leader looks like it could really take off. And I know that this thing is kind of in a mode on the daily chart where it could turn into a kind of a runaway move to the upside. It's just looking like the breakout is taking a little time to get going, but if the market pops, this thing could really pop. So maybe this would be a good time to do a low risk entry. It's got a good relative strength pattern going on right now. My stop, the 65 level, was the level that I kind of want to have. Is pretty good intraday. Not the greatest, but pretty good. So all in all, I would say it looks pretty good. I'm going to hesitate on this one right now for really one reason, and that is that the Qs over here are at that's a really big number for the Qs. So right now, I don't want to pay up on this pattern. Different pattern I might, but on this pattern I don't want to pay up for fear that the Qs are going to perhaps struggle here for a while. I fully expect that if the Qs come back and take this out, I will be way too late, and this thing will probably be over 70. So it's kind of now or never, most likely with this. So I'm going to say it's never for right now. All right. So, question: is it? And Steve, actually I think I answered this question, but not directly. Your question is it true that the closes are stronger resistance or support than the highs? I don't know if that's necessarily true, but what I would call stronger support or resistance is that, and I'm sure you know because I know you've been with us for some time, the idea of support or resistance for me is an area. So if we stick with IYR, and I know that this green line is yesterday's high, I'm going to go back at yesterday and see, well, what happened there? And the fact of the matter is that yesterday's high was set by the last two 5-minute bars. That's not really a whole lot of support or resistance, as opposed to the prior day's high. We have a fair amount of trading around that level. So that's 65 level and yesterday's 75 level. I draw that range and I'd say there should be some support in there because we've had a fair amount of trading in and around that area. All right, so the close, and as it turns out, you've got the close close to the high level, but I use the high or the low as the point to go check out, and then I'll go look at a 5-minute chart or even a 60-minute chart and see how much trading actually happened in the area. If you got a lot of trading or even a lot of volume, then I'll give it more weight. But whether it's the high or the close is not as important to me as the intraday trading that happened there. All right, so this is here's an example of good relative strength, opening range reversal by virtue of the fact that it didn't take out the opening range by all that much. All right, in an environment where the market did. Now, this same pattern will happen on days where, say, the SPYs spend a lot more time down under the opening range. So today, the SPYs didn't take out a lot, spend a lot of time under there. But the same would be true, even more so, if it spent more time, and this one didn't. Now, another pattern to watch out for, another more specific pattern, would be this. Let's just say you want to use hot scans. And let's just say, to keep it easy, so just like my example of IYR, which now I should be kicking myself, but I wasn't really expecting to find it. Let's just say you've got a list of stocks that you're focusing on the long side. So in this case, I'm just taking the focus list portfolio, and let's remove the filter criteria so that I should have pretty much all of them. And so here's a really good starting point for stocks to look for both of these types of patterns on the long side, right? Because these are on the list because we have a long bias for them for today. Now, you don't necessarily know just by looking at this what the other key inflection points are that you might really want to have cleared, right? In some cases, it might be on the focus list, but you really want to see it getting over the prior day's high. But that said, here's how you can quickly identify, as the market's trading, which stocks have these patterns. You can do it. I closed my pen, 1 second. You do it just by looking at the icon, this opening range pattern icon. All right, so I think most of you probably know this, but I'm going to review it quickly anyway. So the icon here has a black dot on the left, and that represents the opening range. Right? Every stock has an opening range. Now, after that, you may or may not have a red or a green dot. So the red or the green dot represent the fact that you either took out the opening range high or took out the opening range low at some point during the day. You don't know when, but if it's got a red dot like the SPYs, means they've taken out the opening range low today, and a green dot means at some point they're taking out the opening range high. Now the right side of the column will tell you what it's currently doing. So someone's saying, can I enlarge the screen? I can't. I can make this bigger, but that's not going to make your view of it bigger. Can you guys see this okay? This is always a question I have with respect to my resolution versus yours. I don't even think if I do this. Oh, maybe. Yikes. That's a little blurry for me. But this definitely zooms it in. I like this. So Trevor, does that help? Okay, so the black dot on the left represents the opening range. The red or the green dots represent where it has been, and the right side represents where it is currently. So if I've got a green arrow, it means I'm currently over the opening range. If I have a black dot, like I do with the SPYs, it means I'm in the middle of my opening range. And if I have a red arrow, like we do here with CLR, it means I'm below the opening range. Now, if we have a situation like SFY here, if I never leave the opening range, which is this is the case, I don't have a green dot or a red dot, I'm still in it. All right, so I don't have two black dots, but I just have one black dot, means I've never left the opening range. So if you put all that together, I can now, and let's just we'll take a look up here. I can see what the SPYs and the Qs are doing and have done. And so I can see the Qs are trading over their opening range, and the SPYs are trading in their opening range after being above it. So in the first example with the IYR, what would have happened with respect to this dot or this pattern would be that I would have seen that the SPYs were still trading under their opening range while IYR traded below it but is now back above it. So let's just take the reverse. So the Qs are trading over their opening range. If I wanted to look to see if anything in my focus list or in my portfolio broke out over the opening range but was now pulling back into the opening range, I can easily do that, right? I can easily do that by looking for something that has a green dot but not a green arrow. So here's an example, DD, D, triple D. The Qs are trading over their opening range still, but DDD broke out and now it's back in it. Now I also know that due to this is the percentage off high, 46%, means it's trading just below the middle of the day's range. So if I wanted to find something, that said, so are the Qs, but if I wanted to find something that was just breaking back down into the opening range and still near the high of the day, WAG would be a better example, because WAG is still only 25% of its range of the day from the high of the day. So it's broken out of its opening range, and now it's back into its opening range, a possible opening range reversal. Now, I'm not looking for opening range reversals on the against the highs in my long list, but you can see, I hope, how I can find the patterns as the day is progressing. Are thinking today's a good day to look for opening range reversals, or now's a good time to look for opening range breakouts, you can always go to the strategies section and go to opening range and find stocks or find scans that'll be pretty close to what you want. All right. So, for example, the IYR trade, long side of the OR low. If you scan the long side of the OR low, what are you really looking for? You're looking for stuff that is basically near its opening range and has potential for a reversal. Now, a good time to do that is when the markets have broken below their opening range, and then you'll find that same kind of setup I saw with IYR. All right, now the HSP example is looking at the breakout scan when the markets are lower, or stocks looking up when the markets are lower. Okay, so a short opportunity scan right now would be to look for the opposite, not the bullish strategies, but the bearish strategies, because the market may be putting in a kind of an opening range reversal here. You could look for stocks that are already breaking down. You could look for stocks that are maybe breaking down, maybe not, but they're just close to their opening range low while the market is trading near its opening range high. Right? So it's a simple concept of looking for stocks that are already kind of ahead of where the market might go next. And that's the relative strength portion of it. All right, so Trevor's asking me to go over the red-green dots. Let me do that again, because that is important. But one thing, let me just go to big volume. One thing you may want to know is that if you go to advanced filters, any particular pattern, all you have to do is check it off if that's the pattern you want to see. All right, so filtering for these things, filtering for the pattern you actually want to see is really easy. It's just a bunch of check boxes. But the reason that I brought you to this page is because this area of the filters basically tells you what everything means. So one thing I didn't go over was the yellow arrow. So the yellow arrow means that you're breaking out of your opening range during your scan period. Okay, so if your scan period is set to 10 minutes, then if you've broken out in the last 10 minutes, you're going to get a yellow arrow. After that 10-minute time frame is up, you're just going to see a green arrow. All right. Now, if you have your setting set to the prior close or the prior open, and you don't really have, it would mean that you'd have a yellow arrow all day long, which would kind of detract from the idea that it's an alert. So what we did there is we set it to 10 minutes. So if you have a scan period that encompasses the whole day, then a yellow arrow is indicative of the last 10 minutes. All right, now, knowing that, you can look at the description of each one of these and see exactly what they mean. You also can find a video, the basic video on hot scans will walk you through what this means, but I'll do it as well right now because understanding this pattern here is, I think, it makes hot scans a heck of a lot more powerful, right? So you've got the black dot on the left, it's always going to be there, represents the opening range. If you've got a green dot, it means at some point you have traded over the opening range. If you have a red dot, it means at some point you've traded below the opening range. If you have a green arrow, it means you're currently over the opening range. If you have a red arrow, it means you're currently under the opening range. If you have a yellow arrow, the direction will mean either above or below the opening range, but the yellow arrow indicates that you have broken the opening range in the last 10 minutes, or sorry, in your scan period. Let me apply that since I see the market's kind of pulling back here. So if I wanted to just do a big volume scan on stocks that are just breaking down to the downside right now, I'd go to big volume. Let's come into, and let's say big volume in the last 10 minutes. Run scan. And let's say I only wanted to find stuff that's breaking down. Now I've only got stuff that's trading below the opening range. And let's see what we come up with. It has to have big volume in the last 10 minutes.